Hi students, how are you? I hope you are keeping well. And in today's session, we are going to discuss one question in final company's final accounts. We are going to uh, prepare a profit and loss statement of profit and loss and statement of financial position of the company. Okay, so shall we move into the question, please? ABC Limited has registered with an authorized share capital of 3 million in equity shares of 10 rupees each. Following is the list of the balance extracted from its books on 31st 3rd 2023. Authorized share capital is 3 million, right? How much they said? 3 million. Okay, right? 3 million. Okay, they have given some sort of purchases and purchases 925,000 wages and list of what you call the balances and after that they say you are required to prepare statement of profit and loss for the year ended 31st December March 2023 and balance sheet as at that date after making the following adjustments. Depreciate plant and machinery at 10%. Right? Depreciate plant and machinery. What is the value of the plant and machinery? Plant and machinery, we have prepared a schedule saying property, plant and equipment. We have mentioned the premises cost, plant and machinery cost, furniture cost, total cost. During the year, no addition, no disposal, the final balance is there. Thereafter, depreciation, we have done the depreciation. In depreciation, okay, depreciation, premises, plant and machinery, furniture, and fittings. Premises and furniture fittings, they have not given any uh, depreciation. For the plant and machinery, they said 10% on cost. 1,500,000 is the cost, then 10% on the 1,500,000 is 150,000, then written down value is 1,350,000. Then the what is called the depreciation is 150,000. So we will see where we have mentioned the depreciation and amortization. We have mentioned here. So what is the value of depreciation? 150,000. Okay, 150,000. We had to mention there, right? First adjustment is that. Okay, and second, they mentioned provision provide half year's interest on debentures. Half year interest on debentures. What is the debenture? Debenture is 6% on 1,500,000. So 1 million, if you say 1,500,000, 6% is this, then divided by 2, right? 45,000 is the debentures, right? What is the debentures? Where is the debentures? Depreciation, amortization, cost of trade receivable, property, plant and equipment, inventories, trade receivables, intangible assets, right? Debentures, interest outstanding on debentures, that is for the 6 months they have said, no? For the, this the question says, for the 6 months debenture interest paid is 45,000, right? Total debentures for the interest is 1,500,000, right, into 6, right, that is equal to 90,000. 45,000 out of 90, 45,000 paid, right, paid, right? So balance is 45,000, right? So interest payable debentures, interest on debentures payable 45,000, right? Other current liabilities, it is coming under the other current liabilities. We will put 45,000, 45,000, right? Here 45,000 debentures, interest on debentures, right? Cost of amortization, employees cost, finance cost. In number 3, finance cost, outstanding debentures for 45,000 is paid, right? That is 90,000, right? Finance cost is 90,000, right? Interest on debentures paid, interest on debentures paid, no? Interest on debentures paid 45,000, and outstanding for 6 months is 45,000, then 90,000. Finance cost 90,000, right? That is note number 3. In the note number 3 we have mentioned finance cost, that is interest on debentures paid. They have mentioned, they have given an information that debentures we have paid 45,000, and they have said debentures 6% at the rate of 6%. So if that is the case, we have to pay 90,000 interest on debentures for 1,500,000, whereas we have paid 45,000 and balance payable is 45,000. Balance payable we have mentioned in the other current liabilities, note number 11, right? Note number 11. If you cannot see, please take a note of it. Note number 11, other current liabilities. Okay, it will show like that. So here 45,000. Okay, so make provision for bad and doubtful debts 4,250, right? We will say who is the bad debts, right? Salary is what do you call, debtors. Where are the debtors? Trade debtors, sundry debtors, right? Sundry debtors 436,000, 436,000, right? 436,000 is the sundry debtors, where we have paid, we have made a bad debts of 10,550 plus provision for bad debts. How much? They wanted us to make a provision during the year of 4,250, right? 4,250. So we have to deduct 4,250 here from the sundry debtors. So here we will get 750, and out of 5, if 4 goes 1 and 3, 431,750 is the trade receivables, right? Trade receivable. Where is the trade receivables? Trade receivable number 6 is 431,000 750 750. Where the bad debts will come in the other expenses, note number 5. Bad debts, we will say how much is the 10,550. 10,550 plus 4,250, right? That is how much? 14,000 14,900 and, right, 14,000, sorry, 250, 14,800, right? 14,800 bad debts, right? Okay, so that is the make provision. Stocks as at 31st March 2023 was 455,000. Stocks where it will affect the stock is manufacturing expenses, general expenses, that is here 4,455,000. Closing stocks 455,000. In the cost of sales we have to deduct, right? In the assets, current assets, inventories 455,000. 455,000. Okay, so there are double effect, right? 4,450,000 in the inventories we had to show as an asset, while we are deducting from the, we are showing the cost of sales note, right? So with that we have we have done the adjustments, and now we will go for the one by one the amount, the giving trial balance extract, right? Purchases 925, purchases here 925,000, right? Cost of sales, right? Thereafter wages, employees benefit, right? It is coming under the employees benefit 4,000 to 424,000, 424,000 and 325, right? And manufacturing expenses, that is other expenses, manufacturing expenses 65,000, 575, 575, and salaries 70,000. Here it is employees benefit cost, that is 70,000. So one we have 70,000, and this is bad debts 10,550. Already we have done the adjustment in the other expenses, bad debts, and directors fees 33,625. That is also other expenses 33,625. 33,625. Okay, 25. And thereafter debenture interest paid, that is already we have taken. Debenture interest paid 45,000, that is here note number 3, financial cost, interest on debentures paid 45,000, outstanding interest 6 months 45,000, 90,000, right? So call in arrears should go to the ordinary share capital, right? Calls in arrears 37,500, 37,500 calls in arrears, we have to deduct it. And plant and machinery 1,500,000 we have taken. Premises 1,650,000 we have taken. Furniture and fittings 35,000 we have taken. Sundry debtors we have taken, right? And general expenses 84,175 is the general expenses, right? Stock on opening stocks is 375,000, that is in cost of material consumed. 375,000. And goodwill is the intangible assets, right? Only one intangible asset is there, therefore we don't provide any what you call the notes, right? Directly we will put 100,000 intangible assets, 100,000. Cash in hand, that is cash and equivalents. Cash in hand is 28,750. 28,750. And cash at bank 222,000. 222,000. Okay, that is cash at bank. Subscribe fully issued share capital is 2 million, right? Subscribed, issued and subscribed fully issued share capital is 2 million, right? 2 million. Okay. Surplus account credit 72,500. Surplus account, right? Surplus account, that is should go to the reserves, right? 72,500 surplus account, right? Surplus account we will put it to the general reserve, right? We will put it to the general reserves, right? Surplus is 72,500. 72,500, that is surplus account. And 6% debentures 1,500,000. 6% debentures, where do we have the debentures, right? Debentures, trade, intangible assets, property, and this thing, investors trade, that is debentures. We will other long term borrowings, that is long term borrowings 1,500,000, right? Debentures 6% debentures 1,500,000, right? 1,500,000 is the long term borrowings, 6%. Trade creditors trade payable. Sundry creditors how much? 290,000. Sundry creditors 290,000, right? And bills payable 167,500. 167,500, that is bills payable. Okay. So general reserve 125,000. General reserve 125,000, right? 125,000. Okay. These are all the balances, general reserves. And sales 2 2,075,000. Revenue 2,075,000, right? 2,075,000 is the revenue. So we have taken all the balances here. So now we will try to balance the accounts, right? That means Right, we will balance the accounts now. First, number one, right, that is 375,000 plus 925,000, right. From that we have to deduct 455,000, right, that is 845,000 is the cost of material consumed. Cost of material consumed is 845,000, right. So here, right, and what is the employee cost? Employee cost 300 and sorry, right, okay, and employee cost is 325 and 4 9 494,000, 494,000 and 325 is the employee's cost, right. Other one is 65,575 plus 84,175 plus 33,625 plus 14,800. So that is 198,000, 198,000 and 175. 198,000 and 175. So if we add with that 150,000, right, plus 90,000 plus 494,325 plus 845,000, right. So 1,700,000 total expenses is, right, 1,777,500, right, right. So we have to deduct that from 2,075,000, right, 2,075,000, then 297,500 is the profit generated, profit from operating activities, right, profit from operating activities. This profit we have to take it to the revenue reserve, right. Current year profit 297,500, right, and dividend, they saves dividends, right, interim dividend 187,500, interim dividend 187,500 we had to deduct it from the current year profit. Then revenue reserve plus 187,500, then 110,000 is the revenue reserve, right, revenue reserve. In the reserves, general reserve, we say 125,000 plus 72,500, that is 197,500 is the amount, right. With that 110,000 we had to add it, 307,500 is the total reserves, right. So that is how I did it, and I don't know, the cash and cash equivalents is 750, right, and 0 1 250,750, right. So sundry creditors, it is 500 and 7 5 357,500 is the sundry creditors. So we have the profit from operation, we have taken this profit from operation to the reserves account in note number 9. Here current year profit 297,500, right? So please take note of it, right? Please take note of it. This, right? This, that is current year profit. Okay, so that is there. And now we can go for the balancing activities. Okay, so here what we can see is number 4. Number 4, property, plant and equipments net value is 3,35,000. 3,35,000, right? 100,000. And cash equivalents, how much? 250,000, 250,000 and 750. 250,000 and 750. So total current assets, are 455,000 plus 431,000.75 plus 250.75. Then 1,137,500, right? This is 3,135,000. 3,135,000. Okay, so 1,137,500 plus 3,135,000 plus 1,137,000. Okay, 37,500. That will come around 4,272,500. Okay, 4,272,500 here. So we have calculated the current assets we have taken. So we will go to the equity and liability. Okay, I will focus on the other side. Okay, so in the equity and liability, stated capital, common shares or ordinary shares issued, we have to deduct that from 2 million, right? 2 million, right? In 2 million we have to deduct 37.5. 1,962,500 is the ordinary share capital, right? So here we are going to say, right, 1,962 and 500, right? That is the ordinary shares. And reserves are note number 9. This is note number 8, and note number 9 is the reserves and surpluses. That is 307,500, right? 307,500. That is 1,962,500 plus 307,500. That is 2,270,000. 2,270,000. So this is there. And trade receivables, trade payables, 357,500. 357,500, right? So the other 11, number 11 also we have taken. So what is the total? Okay, here we have to say 1,500,000 and 357,500 plus 45,000. Okay, so 1,902,000, right? Total liabilities, right? Total liabilities 1 million, right? 1,902 two and 500, right? And 500. If we add this one with two million 270,000, that is that is that is how much? 4,172,500, right? So what is the difference of 100,000? Bills payable is 167,000, right? Bills payable is 167,000. That is the difference. We Here we have taken 167,000. Bills payable should be 167,000. Then 457,000 is the, if you add trade payables, is 457,000. 457,000. So here also you will get 457,000. 457,000. Then 4,272,500. 4,272,500. Okay. So what bills payables, I have taken 67,500, but in the question they have given 167,500. That is the 100,000 deferred, and that has been rectified now. So trade payables is 457,500, and then total equity and liability is 4,272,500, and total assets is 4,272,500. So both are balancing. So here you have you would have seen a new presentation of final accounts, right? Here we did not uh, post the expenses directly to the balance sheet or profit and loss account, right? We are going through the notes to the accounts. We are going through the notes to the account. So hereafter you had to prepare the accounts like this. This is as an example. I have done this question. Hereafter it is better for you to, after going through the accounting standards, if you come and do the final accounts, it will be easy, right? We will see whether we can, if I time permit, if time permits, I will do the accounting standards also. After that we can come and do the continue this company accounts questions. We can practice the company accounts questions here, right? Then that would be helpful for you all, rather than without knowing the accounting standards. Doing final accounts is not good for you, right? You cannot understand, right? Okay. So today I am going to wind out this session, and I hope to meet you in next session. Okay. Thank you. Bye.